Hi, if you're about 40, this is a great video for how you can become your own bank, and we can overfund the front end of it with a small amount of money from you. You put in half and I can get a bank to loan you match you about the same amount. And that'll pack in some good money. So we're going to just show you pulling out equivalent to 135,000 of income every year from age 65 to 90 in your retirement. So $87,000. How much is that? How much do you need to put in? So 87,000. Well, actually, it's equivalent to about 135,000 of income times. Let's see how many years we're going to do this for. So 5, 10, 15, 20, 135,000 times 24. So you're going to get $3,240,000 of value. You'd have to have $3,240,000 in an account to be able to pull this out, and then after tax get $87,000 of after tax money is like the same as having this amount. So what do you have to do that? It's very simple. In this illustration, just give me 30,000 5 years in a row to get $3 million of payouts. Pretty amazing. What is this and how does it work? If you've watched the videos too on the idea of becoming your own bank, you that you understand the benefits of overfunding, the cash value of a life policy to avoid the four thieves of paying bank interest, car interest, taxes on gross or dividends in your portfolios because they happen tax deferred inside, and then we pull tax-free income for life as loans from the policy, which your death benefit pays off later, and you still have a death benefit left to your family. So this young man is 40 years old, and what I'll have him do is if he's willing to put in $30,000 a year, $29,250. I can get the bank to give him $26,000, so he'll have $54,000 going in year 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. He only has to put in the first 5 years here, and the bank will match it as long as he does that steady for 5 years, and we don't even have to collateralize his house or assets. Pretty much unheard of when you're doing premium financing. But then they'll put in the full premium of $54,000. This policy needs $54,000 for 10 years to do its thing, okay? So you're going to put in $30,000 for 5. They're going to put in the other half to get you the 54, and then the next 5 years they'll do the whole 54. You've proven that you can pay your 5 payments, okay? That's going to grow. We're going to pay back the $580,000 in year 15, and then at that point the cash value is $842,000 from you sticking in $150,000. This thing's grown at about 5.5% tax-deferred compounding inside. That's the average compounded rate based on the index. And then you'll have a death benefit over here at that point of $714,000. In the early years, you had a death benefit of $1 million. Okay. So let's see here. Let's shrink this. And then so what happens is let's get this guy out of the way. Not needed over here. All right, so what happens is your death benefit is here, and we want to get to age 65, right? And that will let you start taking 87,000 tax-free loans from the policy from 65 to age 90. And that goes down here till the bottom at age 90. Okay, so that's what the plan for this is. So I guess you have to ask yourself, would I pay $30,000 a year for 5 years to be able to pull out 87,000 from age 65 to 90 is 87,000, which is equivalent to $135,000 out of your IRA. $135,000 out of your IRA times 25 years. That's about $3.4 million, and all you're doing is putting in $30,000 5 times. So pretty cool program if you're young and 40, you have a family, you want to leave some death benefit, and you want to grow your income. The next video we're going to show you is how to exploit the benefits of a life policy for you to dump in some money and pull it right out and maybe go trade crypto and make 96% a year like a friend of mine. But this is your basic idea of, if we can put in $30,000 for 5 years here, I can get the bank to loan you the rest of it, premium financing at a very low rate of roughly in the 4s, and then you should be able to pull out, based on hypothetical back tests, $87,000 from age 65 down here to 90. Okay, and that's all tax-free money that would be equivalent to having to pull $135,000 per year out of an IRA. And let's see here, to be able to pull out $135,000 out of an IRA. Oops. Most annuities will only pay 5% for life. That's what these multi-billion-dollar insurance companies guarantee. So how much would we need? We need a pot of $2.7 million, and all we're doing is putting in $150,000 there. So pretty amazing, and I'd love to get this policy for you if you're a person in your 40s or 35 to 45. Pretty similar numbers here. Okay, I'll put this up for you. Give me a call if you'd like to get started.